How do home loans work? That's what we're covering in today's video. If you're new to the channel, my name is Stephanie Weeks and I've been helping people for over 18 years with their mortgage financing. Please be sure to subscribe to the channel. Don't forget to hit the bell to be notified every time I drop new videos, which is actually every week. And please do hit that like button as well if you're enjoying the content. Whether you're moving in 9 days or 90 days, if you're in Louisiana, Mississippi, Alabama, or Florida to purchase your new home, I would love to help you. My team would be delighted and appreciative of the opportunity to serve you through this exciting time. Give us a call, shoot us a text, or send us an email. So how do home loans work? It is a little bit complicated, and so I do believe that a lot of my other video content will help you and will kind of go hand in hand with what we're talking about today. But overall, how they work is, think of it like your car. Let's say that you buy a car. If you pay cash for the car, then you own the car free and clear. A house is very similar. Like with your car, if you buy your car but you finance your car, then you don't own it free and clear. There's a lien. The same thing goes with buying real estate if you're dealing with a mortgage. So let's say that you're buying a home and you're paying cash, well then you owe it free and clear. But let's say that you're like most of us and you're purchasing a home and there is a mortgage against the property or a home loan that you're going to be getting to purchase the property. Then a lien will be taken out against that home. That way you don't own it free and clear. The way that the mortgage loan works is the lender wants to look at not only you and that you qualify and you are likely to repay, but they also look at the collateral that you're financing, which in this case is going to be a home. Let's dive into each one of those a little more deeper. I'm going to do a quick little plug because I built a first-time home buyer's massive mortgage education course that I usually charge $597 for, and I'm going to drop a link below for all of you to purchase it at $97. Words can't express. It's almost like growing a baby and having a baby. This course has been so much fun and so much passion and so much dedication has gone into this to not only help you get a great loan approval, a great pre-approval, but also help you with a smooth and on-time closing. So enough of that. When it comes to you, the lender that is going to provide the home loan wants to make sure that you have accurate and dependable credit that shows that you are likely to repay the loan. So they're going to look at your credit and your credit history. They're going to look at how long you've had credit, what percentage is good versus bad, how good versus how bad, and they're going to make sure that they're comfortable that you're likely to repay. In addition to that, they're going to look at the capacity to repay, meaning they're going to look at your budget and they're going to look at your income and they're going to determine what's called a debt to income ratio and make sure that that fits within the guidelines of what would allow for the home loan to be approved. Now, with each different loan type, those DTI requirements are actually different. So it's going to depend on your loan type. Another thing is when they're looking at that DTI, they're not looking at diapers, they're not looking at groceries, they're not looking at gas. They're looking at actual loans that you have a responsibility to repay. And they're looking at things like credit cards and stuff like that, and looking at the minimum payments, not necessarily the overall balance, but the minimum payments that they can calculate or that are required on those certain debts in relation to the income. So we've got the credit, we've got the capacity. Then we've got the collateral, and the collateral is the home. They want to make sure that that loan is going to be secure. Meaning that if heaven forbid you have to default because you can't pay, that they have adequate and acceptable collateral for that home loan so that they can go ahead and sell that to recoup their money and hopefully not have a loss. That is another crucial piece as well. Now, the home loans are going to vary depending upon what type that you qualify for and or choose to proceed with. The common types of home loans are VA, FHA, conventional, and USDA RD loans. Quick little overview. You've got USDA RD, which is 100% financing. It's only available in certain areas, and there are income limits that apply. Then you've got VA, which is another 100% loan, and that is for qualified veterans. Then you've got FHA, that is a requirement of at least 3.5% down. Then you've got conventional with a minimum down of 3% if you're a first-time home buyer. Generally speaking, sometimes you can still get away with that 3% conventional without being a first-time home buyer, but the next tier most commonly heard of is 5%. But you typically do not need to have 20% down to purchase a home and get a home loan. Now that really does depend on your exact scenario. Let me just throw a random one out there for you. Let's say that maybe you have no credit scores. Well, then you might possibly be required to put 20% down. Let's say that maybe you have a 580 credit score. You might possibly be required to put down at least 10%. If you're more in the average range, which it does change, I find that the average credit score tends to fluctuate between a 680 and a 700. A lot of these programs will go down to a 640, lower in some instances, but usually the 640 is a good rule of thumb to possibly be able to finance with the minimum down payment. Of the loans I mentioned, conventional is going to be the hardest when it comes to lower credit scores, but not impossible because it depends on your whole situation. Again, I'm going to relate it to purchasing a car. Another part of the home loan process and how it works is that we want to make sure that there is clear title to be able to pass from the seller to you as the buyer. Now, if you're talking about a refinance because maybe you inherited a property and now you're looking to get a home loan against it, they would still make sure that there's clear title to be able to protect the lender and make sure that they're in first lien position, as we call it. So part of that process in the home loan, I'm going to give you a quick overview of the process, is doing a loan application, submitting documents so that you can then get a pre-approval. Once you've got the pre-approval and you've got the home picked out if you're buying, or you've got your property if you're refinancing, then from there lender would order title to make sure it's clear. They would order appraisal to make sure that the collateral is acceptable. They would put you through underwriting to make sure you fit in the box of all the guidelines. And then once all of that is gone through and completely approved and acceptable, then you would actually go to a closing from there. Thank you so much for tuning in. I hope you enjoyed today's video. Remember, if you're moving in 9 days or 90 days, give me a call, shoot me a text, or send me an email so I can help you with your smooth move to either Louisiana, Mississippi, Alabama, or Florida. I'll see you in the next one.